Hello, everyone, and welcome back to another episode of my YouTube content. In today's content, I'll be teaching you a different thing, which is synthetics indices. If you are part of my followers, you know that I also trade synthetic indices aside currencies. So, in today's video, this is what we will be dealing with. On this particular synthetic indices, I gave a signal out to my Telegram channel, which I'll be dropping the link in the description below, where myself, I took a $200 to $1,600 in 10 minutes. That's impressive, right? So in today's video, I'd like to take you through how I was able to take that $200 to $1,600. Without wasting much time, let's get started. But before that, hit on the subscribe button and also hit on the thumbs up button. Let's get started. So if you are my follower for some time now, you should know that anytime I want to analyze a chart, I start with the top-down analysis. Now, when it comes to synthetic indices, we start from the daily time frame, unlike the currency pair where you can start from the monthly and so on, or yearly and so on. But when it comes to derivative, we start with the daily time frame, which is the 24 hours. Then from the 24 hours, you move to 8, 4, and above. Now, when you look at this chart, what is it telling you? We are in a downtrend, right? The only problem we have with derivative is that we don't have the aspect where you can play back. Okay, but we will still find a way out. So now you can see that price is moving in a downtrend. We are in a downtrend, so what will I be looking for? I'll be looking for selling opportunities, because this is even a daily time frame. So any buy opportunity I'll be taking at this side means that I am taking a counter trade. And on this particular trade, guess what I did? I didn't use my usual retail method. On this particular one, I used the SMC method to do my analysis. So let me take you through how I did that. I wouldn't like to talk too much and take too much of your time. So what we'll do is that we are going to concentrate on this aspect of the chart, which is around where the current price is. So that is where we are going to concentrate. Before that, I like to put here or let you know what the institutional reference points are. Like I said, I'll be using the SMC method in today's analysis, which is the same as institutional trading method, or trading like the big banks. So we have it here. We have the order block, rejection block, mitigation block, liquidity void, old highs and old lows, fair value gap, and breaker block. And like I also said, we are going to concentrate on this aspect, which is around the current price. Alright, so the first thing I did here is to spot an institutional reference point. And you know, this institution, anytime they want to take orders, they usually take 2 orders. They take the first orders and then they refill the second order later. So what we are interested in is where they took their first order. So their first order was taken around this area. You can see this is a supply zone. Let me change the color for you to see it well. Let's use the blue around this area. The reason why I didn't want to delete this yellow is because I said that our concentration is just around this area, or better still, I can still delete it so that we continue. Yeah, so this is the first order that was taken by the big boys or the big players. Now, why did I say I am using this place as my supply zone? Because we had a break of structure here. Price has broken structure at this point. We also have the liquidity that was taken out at this point. We have this liquidity that was taken up here, and then we also have all these are reference points. Then we also have an imbalance around this area. You can see this is an imbalance here, and we are waiting for price to come and balance that imbalance, so inefficiency from here to that side. So this is the reason why I have taken this side as my point of interest or AOI. So what I'll be waiting for is for price to move from this aspect like this to that zone, and then I can sell. Okay, so for me to wait for that zone to be mitigated, I'll be looking around to see if I can get any buy opportunity, and then I buy into that zone. So if I am buying from here, then it means that I am waiting to take my profit in this supply zone. I hope it's clear. So this is on the 24-hour, which is the daily time frame. So this is the higher time frame. Now we move to the lower time frame and then continue from there. So now let's move to the 4-hour time frame and still break this chart down. Because I took a buy trade, I didn't take a sell trade. I was still waiting for this zone to get mitigated or to be triggered before I continue my sales. So this is the 4-hour chart. This trade was taken 3 days ago. So like I said, on this particular trading view for derivative, we don't have a playback. This is the trade I took from here to here. That is why I've put it in this gray box. Okay, so we are going to ignore this aspect, the one in the yellow box. This is not the one I drew on the this is not the one I drew on the 24-hour. This is on the 4-hour and the 1 hour. So what we are going to do is that we are going to concentrate on this one, the one I took here. You see this buy trade, this is the one I took, and that's what I want to break down. So this aspect is not part, so just take it out and let's concentrate on this one. So how did I do the analysis and I got to this point, knowing that this trade is going to buy to the upside? On the 4-hour, what can you see? You can see that price is creating a series of higher highs and higher lows, telling us that the zone we draw on the daily time frame would definitely be traded. So you can see that we have a series of higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. So you can see what is happening on the 4-hour. So this is the 4-hour for you. Now what did I do? I moved straight to the 1 hour. So let's move to the 1 hour and see what we have on the 1 hour. So this is us on the 1 hour time frame. Now the 1 hour time frame, what did I see here? We have this mitigation candle, this one, mitigation candle here, this candle, this bullish order block. People will call it bullish order block. Some will also say mitigation candle that has taken out this liquidity around this area. When you go to the lower time frame, you see this clearly. So this is the candle that has caused this explosion to the upside, breaking a structure at this point. You see that's broken a structure to what? To the upside. So what are we going to wait for? We wait for price to come back to this same zone, then we can take what? A buy. Okay, so that is what we are looking at. Now we will move to the lower time frame and see if we can get an entry there. Now with this same order block, or with this same explosive move, we also have the imbalance around this area. We have imbalance here that is supposed to be balance. So the first order was taken, we are waiting for the second order to be taken. So price needs to come and balance this imbalance. And when most of the time what I do is that I pay attention to imbalance that is closer to an order block or a mitigation block. So once this happens, it means that price is supposed to come back to fill that imbalance, which is the inefficiency. Now this is what's happening on the 30 minutes. Now this is the 30 minutes. So on the 30 minutes, what I did again was that I refined the order block. So when I'm refining the order block, this is where my, let me change this so that we can get it clearly. No, need a nice color. Okay, so this is the 30 minutes. On the 30 minutes, when I refine the order block, this is where my order block will now be here at this point, you see. And the reason why we refine the order block is to reduce our risk. So after refining, what else? We have an inducement around this area, tricking people to think that they can continue what? Tricking people to think that they can start buying from this point. But as an SMC trader on this chart, we are looking at price to come back to mitigate this zone at this point for us to what? For us to take our buy trade. Usually when it comes to the refinement, a lot of people wait for the block to be mitigated before they refine to get a good breaks to reward. But because I was already on the 30 minutes or 50 minutes, so I decided to just refine the order block. Now what else do I need to do? I have to pull out my, now what will happen here is that you can take your entry from the 50%. This particular trade was taken aggressively, not conservatively, because I didn't look for any entry confirmation. So the 50%, you share the, how do we call it? You share the order block into two. So at this point, you can take your entry, or you wait and take your entry after the block has fully been mitigated. So you can take your entry from the 50%. So when you take your entry from the 50%, you realize that the first people will take their trade from this side, and then the second will take their trade for this side. Aside that, if you're taking it on the 50%, then it means that our Excel will be below the order block. That is how I like to do it. Our SL will be below the order block, then our take profit to be at the nearest support or resistance, you see. So this is the SL below the order block. Don't do too much of the 50%, but I know people who do more of the 50%. So those who took the 50% will take it around this area, and those of us who are not doing the 50% means that when we even take it around this area, you see that price came back into that same order block again before moving up. But because our SL was below the order block, it was not triggered. So what is the SL? The SL is only 20 pips, very small, and the take profit is what? The take profit is, and the take profit is 68%, and this is 1:3.4. This is a very good risk to reward ratio. So this is the buy trade I took, the one that I gave out, and I made almost $1,600 with $200 on this single trade. So imagine I still used a bigger lot, I should be making like $10,000, right? So that is that for the buy trade on crash 500. This has brought us to the end of this video, if you are loving this video, hit the thumbs up. Also hit the subscribe button and leave a comment below if you want to see more of content like this, especially on deriv. Okay, so please hit the subscribe button. See you in the next video. Thank you for watching once again, and peace out.